When the market in that city started to soften, they saw a significant drop in rental income and property values. Real estate, like any other investment, goes through cycles. Diversification is a key strategy for mitigating risk. In times of market volatility, cash flow is king. Hey everyone, Anthony A. Luna here, CEO of Coastline Equity and the host of the Owner Mindset podcast. Today's episode is all about navigating market volatility and developing a strategic approach to asset and property management. If you're a seasoned property owner or a real estate investor managing a large portfolio, this episode is for you. We're going to cover how to weather economic downturns and make informed decisions using data and develop a resilient asset management strategy that ensures long-term success. So let's jump right in. Let's start by understanding market cycles. Real estate, like any other investment, goes through cycles. These cycles can be influenced by a range of factors, including interest rates, economic conditions, and even global events. Understanding where the market is in its cycle is crucial to making informed investment decisions. Right now, 2025, we're in a period of economic uncertainty. Interest rates have also been fluctuating. Inflation is a concern, and global events are impacting markets in a way that are hard to predict. For property owners, this means you need to be more strategic than ever. It's not just about surviving the downturns, it's about positioning yourself to thrive when the market recovers. How do you do that? The key is to develop a deep understanding of market cycles and how they affect real estate. For example, during a downturn, property values might decrease, but rental demand could increase as people delay buying homes. Now that we've covered market cycles, let's move on to developing a resilient asset management strategy. The goal here is to create a strategy that not only protects your assets during downturns, but also positions them for growth when the markets recover. First, focus on cash flow. In times of market volatility, cash flow is king. Ensure that your properties are generating enough income to cover all expenses, including your mortgage payments, maintenance, and taxes. If you're managing a portfolio, analyze each property's cash flow and consider selling underperforming assets if necessary. This will free up capital that can be reinvested into higher performing properties. Next, consider diversifying your portfolio. Diversification is a key strategy for mitigating risk. If all of your properties are in one location or in the same product type, you're exposed to greater risk if the market or the property type take a hit. Consider investing in different types of properties, such as single-family homes, multifamily units, and even commercial properties across various locations whenever possible. Another critical aspect of a resilient asset management strategy is maintaining a strong balance sheet. This means having enough reserves to cover unexpected expenses or vacancies. It's also a good idea to review your debt structure. If you have variable rate loans, consider refinancing to fixed rate loans to protect yourself from rising interest rates during those times in the cycle. Leveraging data and market insights, data-driven decision-making is essential in today's real estate market. The more information you have, the better decisions you're likely to make. But it's not just about collecting the data, it's about analyzing it and really turning it into actionable insights. Start by tracking and establishing those key performance indicators or KPIs in your own portfolio. These might include occupancy rates, rental income, maintenance cost, and tenant turnover. Use the data to identify trends and potential issues before they become significant problems. Market data is also crucial. Keep an eye on local market conditions, including property values, rental rates, and supply and demand dynamics. Understanding these factors allow you to adjust your strategy as needed. For example, if you notice that rental rates are rising in a particular area, you might consider or decide to invest in properties there before prices go up. In addition to local market data, consider broader economic indicators like interest rates, employment rates, and consumer confidence. These indicators can give you a sense of where the economy is heading and how it might impact the real estate market. Finally, don't underestimate the value of professional advice. Working with a financial advisor who specializes in real estate can help you interpret the data and make informed decisions that align with your long-term goal. Let's take a look at a few case studies that illustrate how to successfully navigate market volatility. One of our clients had a portfolio heavily concentrated in a high-end residential portfolio in a single city. When the market in that city started to soften, they saw a significant drop in rental income and property values. We advised them to diversify by investing in multifamily units in a different city with a strong rental market, since multifamily assets were their desired property type. This move not only stabilized their income, but also positioned them to benefit from future growth in that new market. Cash flow management. Another client we have was struggling with cash flow issues due to high vacancy rates in their recently purchased commercial property. After a thorough analysis, we recommended converting some of their commercial spaces into residential units. The change has significantly improved their cash flow and reduced some of their risk, though it was an expensive project to undertake. Strategic debt restructuring. A client with several variable rate loans was facing increasing costs as interest rates began to rise. We worked with them to refinance their loans to fixed rate options, locking in lower rates and providing them with more predictable expenses. This move allowed them to weather the rising interest rate environment that we've been experiencing in the last couple of years. These case studies highlight the importance of being proactive and adaptable in your asset management strategy. By understanding the market, leveraging data, and making informed decisions, you can navigate volatility and position your portfolio for long-term success. The importance of flexibility and diversification. I want to emphasize one more time the importance of flexibility and diversification in your investment strategy. The market will change, sometimes in ways you can't predict. The investors who succeed long-term are those who can adapt to these changes and diversify their portfolios to minimize the risk. Diversification doesn't just mean owning different types of properties in different locations. It also means being open to different investment strategies. For example, some investors might focus on flipping properties in a hot market, while others might invest in long-term rental properties in a more stable area. The key is to have a mix of strategies that can perform well in different market conditions. Flexibility is also critical. Be prepared to adjust your strategy as the market evolves. This might mean selling underperforming properties, refinancing to take advantage of lower interest rates, or shifting your focus to different property types. The more flexible you are, the better you'll be able to navigate market volatility and take advantage of opportunities as they come up. As we wrap up today's episode, here are a few key takeaways. Understand the market cycles, develop a resilient asset management strategy, leverage data and market insights, and maintain flexibility and diversification in your portfolio. By following these principles, you can not only survive market volatility, but thrive in it. Remember, real estate investing is a long-term game. It's a marathon and not a sprint. It's about making smart decisions today that will pay off tomorrow. If you found today's episode helpful, make sure to subscribe to the Owner Mindset Podcast for more tips and strategies. Thanks for tuning in. Until next time, stay informed, stay flexible, and keep building your wealth through real estate.
Anthony A. Luna is the CEO of Coastline Equity Property Management, based in Southern California. As a respected Forbes and Fast Company contributor, Anthony shares insights that help property management professionals excel while giving back to their communities. His upcoming book, Property Management Excellence, will be available in 2025 on Amazon, Barnes & Noble, and bookstores worldwide.